What is up, investors? And welcome back to another video. Today I want to talk about OZOP Energy Solutions. This is a company that I've done two previous videos about. In the first video I brought you guys an overview of the company, who they are, what they do, and we looked at recent news and I explained some of the concerns I had with the company. In the second video I brought you guys the latest news and updates and said I was looking forward to the financial statements that the company filed with the SEC. Well, those financial statements have been filed and trust me, I was shocked. So stick around, you need to hear this. I usually ask you guys to like the video, but I'm not going to do that here. I already know that I'll get a ton of dislikes in this video because nobody likes to hear when things aren't so good. I will say though that if you want to get true information about stocks, then subscribe to the channel. I do not pump stocks, I provide information that you might not be aware of. I look at a company's financials and I analyse them. As I've said a ton of times now, I am not a financial advisor and these videos should not be considered financial advice. But I do have a financial background, I have an honours degree in finance and I have several years experience working in public finance in Ireland. Making videos on YouTube is new to me, analysing financial statements is not. But these videos are for entertainment purposes only. I do not hold a position in OZOP and I have no interest in the stock. I am not a bull, I am not a bear and I am not a cat. I simply analyse the information that I find. So let's get into it. So guys, I've gone over OZOP already twice. So if you're here now, I assume you know the basics. So I'm going to move straight on to some recent news and then on to the financial statements that were only filed yesterday. If you want, you can check out my previous videos. I'll put links in the description. OZOP is happy to announce the launch of its new sales division with approximately 10,000 square feet of warehouse and office space located on the west coast. Heading up the new sales arm of OZOP Energy Systems are two very experienced sales executives with an extensive history in direct renewable sales, maintaining a client base that can generate between 5 to 8 million in sales monthly. Tim Tour and Chris Cerna have spent the past 2 weeks locating the new office and are now preparing to get up and running with an additional 4 or 5 industry experienced salespeople to join the team in the coming months. Brian Conway has stated that it's a real home run to bring such instant growth to the company. Both Tim Tour and Chris Cerna have joined OZOP from a company called Cranach Solar. Cranach is a multinational solar company operating in 23 countries worldwide, employing more than 600 people. They are headquartered in Germany, and both Tim and Christopher have joined from their USA company. OZOP is pleased to announce the addition of Yvonne Hu as our internal consultant to the renewable energy Asian markets. Yvonne Hu is the founder and president of Anchor International Investment Group, an investment and consulting company. With over 20 years of experience in the real estate industry, her speciality is in commercial real estate development. Her extensive market knowledge and broad range of network and resource led her to become involved in multinational projects. Anchor is a global company with offices in New York, New Jersey, and Philadelphia, focusing on international infrastructure product development, especially energy power plant, renewable energy, water, railroad, natural resources, government affordable housing, smart city prototype projects, etc. Anchor's associated partners are worldwide public and private corporations, including China state-owned enterprises, UK construction management companies, and American engineering firms familiar with different financial structures. Of the 3 recruits, first I thought, wow, to have someone of Miss Hu's experience on board would be hugely beneficial to OZOP Energy Solutions. Having a look at Miss Hu's LinkedIn page, she appears to have a good history, and the Anchor International Investment website shows they are presenting multiple energy infrastructure construction corporations to develop power plants globally. Developing power plants globally, that sounds like a very big operation. So I thought this was fantastic for OZOP. This is major. So I decided to take a look at the 2 offices listed here on the Anchor International website. This is what I found for the New York office. Not sure where in this picture it is, but this is Google Maps, it could be wrong. So I said I'd have a look for the Philadelphia office. This is Anchor International's Philadelphia office. This is a global company, partnering worldwide public and private corporations. I'll leave it at that. So let's move on to the company's annual report. This is where things get very interesting. And I really do encourage everyone who has an interest in this company to go look at the annual report for themselves. Seriously guys, if you're invested in this company, you need to look at these reports. First we'll look at the risk factors. Item number 3, legal proceedings. OZOP and CEO Brian Conway are accused of violations of federal and state securities law. The complaint alleges that the plaintiffs' purchase and sale of OZOP securities and damages caused by OZOP and its CEO were violations of federal and state securities law. The securities fraud complaint, first dated January 12th, which the complainant alleges contained materially false, misleading information about the execution of a master supply agreement, overall causing the plaintiffs to suffer significant losses in excess of $2 million as a direct and proximate result of the defendant's material misrepresentations. Of course, the company disputes the allegations and have engaged counsel to vigorously defend the company and CEO. Then guys, we move on to page 20. Management's report on internal controls over financial reporting. The company have found that they have inadequate number of personnel in expertise in key functional areas of finance and accounting, inadequate number of personnel to properly implement control procedures, do not have a functioning audit committee. But this one down here is bigger than the rest. There is a more than remote likelihood that misstatements which could be material to the annual or interim financial reports could occur that would not be prevented or detected. From my own experience, in both education and in practice, for a publicly traded company to say they don't have the personnel to do any of these things is a complete joke. Many years ago, I worked in a small local supermarket. Even they had controls better than this. The third thing here is the going concern issue. Now, every set of financial statements will have this going concern note. And anytime a company is making a loss, it'll show up as an issue. But the wording is very important. These factors, among others, raise substantial doubt regarding the company's ability to continue as a going concern. Substantial doubt is the key word here. And it continues. Management's plan in this regard to these matters are also described in Note 2 to the financial statements. So let's take a look at Note 2. Management believes it will be able to access the public equities market for fundraising, for product development, sales and marketing, and as we expand our distribution in the US market, we will need to meet increasing inventory requirements. If you don't understand that, it's dilution. Great plan. So let's look at the actual financial statements and compare them to the previous period statement. Looking here at the balance sheet from September 2020, we have total assets of 13.7 million compared to total liabilities of 6.6. In my first video, we went through these statements and I said I found it highly concerning that the company's major asset was Goodwill of 11.4. Check my first video from the 5-minute mark onwards. In December 2020, and this is only the next quarter, the Goodwill figure is gone. We now have assets of 2.4 million and liabilities of 6.9 million. So in the space of 3 months, we've gone from asset liability ratio of 2 to 1 to now having nearly 3 times more liabilities than assets. This is a huge reversal. We'll talk more about the Goodwill figure in just a moment, but before I leave the balance sheet, let's look at the liabilities. Convertible notes, deferred liability, derivative liability, all added between September and December. Again, unfortunately, the best case scenario with these is share dilution. So now let's look at the income statement. The very first thing I'm going to point out here is the revenue for 9 months up to December. The very first thing I want to point out here is the revenue for the 9 months up to September 30th was 1.493 million. Up to September. That's for 9 months. Yet the revenue for the 12 months was 1.411. So for the first 9 months of the year, they had more revenue than in the full 12 months of the year. Let that sink in for a minute, because that makes no sense. I'll go back to what we said earlier about being probable material misstatements in the accounts. This is a perfect example. Now, I don't mean to blow this out of proportion because these things are not too uncommon, but it does raise a red flag regarding their control procedures and recording of financial information. The huge concern here is that from the revenue of 1.4, the cost of goods sold is also 1.4. So there isn't even any gross profit before taking out all general expenses. Then look here at the impairment of intangible assets. We mentioned the Goodwill figure a few moments ago. The company reviews the goodwill allocated to each of the reporting units for possible impairment annually, and whenever events or changes in circumstance indicate the carrying amount may not be recoverable, management has determined that the goodwill arising from the above transaction has been impaired, and accordingly $11.2 million has been recorded as an impairment expense for the year ended December 31st, 2020. Now, I've had a lot of misinformation about goodwill thrown at me yesterday. One investor even tried to tell me that an $11 million impairment is negative goodwill and therefore a good thing for investors. So I'm going to try and clear this up very, very simply. Goodwill is the portion of the purchase price that is higher than the sum of the net fair value of all assets purchased in the acquisition and the liability assumed in the process. In other words, it's the amount extra you pay for something above what it's worth. Think of PS5s last year. When there was a shortage, lots of people paid well above fair value to get one. Then we have negative goodwill. This is when someone pays a price that is below the fair value, i.e. you've got a bargain. Technically, in this case, whatever you bought you could sell on the open market at a higher price instantly. And finally, a goodwill impairment occurs when a company decides to pay more than book value for an acquisition of an asset, and then the value of that asset declines. An impairment is a permanent reduction in the value of an asset. Sometimes impairments can be caused due to damage or excessive wear and tear of an asset. They have effectively paid $11 million over the fair value, and then only 3 months later said it's impaired. Remember, this impairment is in the December accounts, not in the September accounts. They have paid $11 million over the fair value of only $1.2 million of assets. Let that sink in. I'll give you an example. If you went and gave $11 million to a stockbroker and 3 months later he told you that your $11 million investment was only worth a few dollars now, what would you do? It's no different here. Shareholders invest in good faith that the money will be spent carefully, not recklessly. Anyways, let's get back to the statements. An overall loss for the year of $20.5 million. Think about this realistically. They have sold $1.4 million of product. Of that, they have $7,000 gross profit and overall a $20.5 million loss. This is crazy. So guys, that brings us near the end of the video. First, I want to say, if you enjoyed the video or found value in anything I've said, please hit that like button. More than likely this video will get more dislikes than likes due to the fact that what I'm saying is not good news. Before you call me a bear or a hater of OZOP or whatever, just remember that I have backed up everything I've said in this video, absolutely everything, with actual information from the company's own reports. I have not talked about rumours, only facts. For anyone who's invested in OZOP and is in it for the long term, I wish you well. I really hope I'm wrong. And if you're new here and you want honest information about companies, hit that subscribe button. I give honest opinions. But remember, these are just my opinions. And this is for entertainment purposes only. If you're in need of financial advice, I suggest you consult a professional financial advisor. Thanks for watching the video. Leave a comment down below. Tell me your thoughts on OZOP Energy Solutions. Stay safe in the market and catch you in the next one.